The problem we're about to do now deals with interpreting information off the income statement and the balance sheet. Now you remember that the connection between those two statements has to do really with net income. There's only two things a company can do with its net income: either pay it out in dividends or retain it in the firm. The retained earnings that's on the balance sheet now, that's a cumulative number. That means that's the amount of earnings over the years that the owners have reinvested into the company. And indeed, the first question that they ask us in this problem, which reads this way, it says the Davidson Corporation's balance sheet and income statement is provided here. And again, they give you the balance sheet and they give you the income statement for the company. And we're only working parts B, C, and D. Part B now reads how much money has been reinvested in the firm over the years. Now, if you look at the balance sheet section and you look down in the liabilities and equity section, you'll see that the equity of the company is $1,600,000,000. And that's the answer to Part B. And again, this is the retained earnings of the firm. It's a cumulative number. It's not a pool of cash or anything like that. Recall that there's only two things a company can do with money that it retains: buy more assets or pay off their debt. But retained earnings comes from net income. And that $1.6 billion means that that's how much money the owners of the firm have reinvested into the firm over the years. So if this company's been around for 15 years, that means that over that 15 years, the owners have reinvested $1,600,000,000 in the company. Now the C part of this problem says, at the present time, how large a check could be written without it bouncing? Now, just like you and me, the biggest check that you and I can write is what we have in our checking account, cash, plus what we have in our savings account, what companies like to call cash equivalents. So if you look on the balance sheet again, you'll see cash and cash equivalents, and that's the largest check the company could write without the check bouncing. And in this case, that's $15 million. Cash and cash equivalents, that's how much the company has sort of laying around that it could write a check on. And again, the answer to this problem is $15 million. The D part says how much money must be paid to current creditors within the next year. Now, that's what's called current liabilities. That's the indebtedness that's due, the debt that has to be paid within the next year. And if you look at the current liabilities section of the balance sheet, you'll see the total current liabilities is $620 million. So over the next year, the company has to generate earnings and all that kind of thing, but they have to pay off bills, debts that they owe, in the amount of $620 million.